Margins are soaring, and they're soaring because of semiconductor margins. And semiconductor margins are soaring not because we're having some kind of productivity boom, but we're having an operating leverage boom. And that's a really big difference.
Great.
So you've seen, let's look at EBIT margins for the SOX. EBIT margins, earnings before income and taxes. EBIT margins in 2025 were 16%. In 2026, they're expected to be 44%. Wow. This is absolutely incredible amount of margin expansion, because what happens with a high fixed cost business like semiconductors is that it doesn't take a lot of revenue growth to see it transfer down into the bottom line. So you get what the street calls really good incremental margins. The catch with that, though, is that it's not necessarily sustainable. If you see revenue growth start to slow, that incremental margin turns into what's called a decremental margin, and you see profits drop a lot more than you see revenues drop.
That's operating margin underlined. So does that mean, we had very, very strong first quarter earnings. The bar is pretty high for the second quarter. Can the S&P 500 meet that bar, do you think?
Yeah, the bar is at 23% earnings growth for the second quarter. And what's unique about this quarter is usually through the quarter, analysts are cutting their forecasts. So they cut their forecasts and people jump over the lowered bar and everybody high fives themselves and say, great quarter, guys. Yeah. But the reality is that this quarter, you're seeing earnings estimates having gone up from 18% to start the quarter to 23%. And so as we think about the normal cadence of earnings beats, which usually you have 80 to 85% of names beat in each and every quarter, I think the big question is, will you see that same kind of earnings beat rate because you've raised the bar so much over the course of the last few months?
Yep, absolutely. So what are we doing here with the AI trade? I feel like the market really has been over the last several quarters trying to discern winners and losers. How do you guys think about that?
Yeah, well, we think the whole AI trade, whether you're thinking about those that are spending the money or those that are receiving those CapEx dollars, all depends on the forecast for CapEx guidance from the hyperscalers. Morgan Stanley put out a note last week where they said that they expected 2027 CapEx guidance to go up to $1.2 trillion and then $1.4 trillion in 28. The ultimate question is, who pays for that?
Right. Is it rotation when we move from a big move in SOX back over to the Mag 7? Like right now, there's something going on there. Is that like a legitimate rotation?
Well, that has been the story over the course of 2026. You've seen Mag 7 significantly underperform the SOX because the market has been saying, hey, we'd rather pay up for the guys who are receiving the CapEx dollars versus the guys who are spending the CapEx dollars. And so the ultimate question in all of this is, when will Mag 7, mostly the hyperscalers, start seeing a return on all of this CapEx spending?
Like when? What's your guess?
Well, I think it very much remains to be seen. And the one stat that we're looking at the closest is cash flow from operations. Everybody looks at free cash flow. That's cash flow from operations minus CapEx. We know that CapEx is soaring, but if you want to spend more money on CapEx, your operating cash flow has to go up.
She brings an audience at a CFA Society bar.
Exactly.
After the speech, after the panels, she brings the bar to a complete halt between EBIT and CapEx.
Yeah. That's a lot of geek speak there.
Cash flow.
Exactly. So what's screening well for you these days, whether it's a sector or a factor? What are you looking at these days?
I will say the quality factor has been absolutely walloped on a year-to-date basis. It has significantly lagged in the various ways that you can define quality, because all of the strength has been in high beta momentum as well as unprofitable names. You look at something like the Goldman Sachs Unprofitable Tech Index, which really led coming out of the April lows. It was up 50% coming off of the April lows, so significant outperformance. But you're starting to see those things crack. Over the last couple of weeks, high beta momentum is down about 20% or 27%, sorry. The unprofitable tech index is below its 50-day moving average for the first time in a while. So it feels as if we're starting to see a shift back to more fundamentally driven market versus YOLO, dream for the future market.
Okay, I would start while you're here. Voodoo Bayou. Orlando.
Oh, man.
And if you want to start out like me, you try Shakey's Gator Tail,
Yeah.
which is basically gator tail with stuff put on it so you don't taste the gator tail.
Voodoo Bayou is on Sand Lake Road, which is Restaurant Row. And so you could do a whole progress through the world. It's sort of like Epcot, but just on one street. It's fantastic.
I mean, it's just, do you do like a gator sushi?
No, I think that would be ill-advised.
You'd have to
It's in the
cook it.
swamp. You need to cook this. Yeah.
All right, I'm looking at this Voodoo Bayou. It looks like it could be our kind of place, Tom.
To a remote from
Yeah,
there.
I think I'm looking at the bar.
Road trip.
Set up for us.
Do you do the strip mall and Orlando walk of Gator Tail? Do you do that in a Cutlass Supreme, or do you do that in an old '68 Mustang?
Look. If you want to do a gator crawl, where we just find all the
Right.
fried gator in all of Orlando, I'm right there with you. We can go for an airboat ride and everything.
Yeah. We could do
That's
that.
very cool.
We could do
actually.
that.
We could do
Yep.
that.